The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 19th Turnaround Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they are communicating to you and I at just past 1 o'clock in the afternoon on this terrific day. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in. 877-927-6648. Internationally, 727-445-1044. You and I, we can go take a look at any chart that you want, any time frame, and we'll go figure out what it's communicating to you and I. So let's get this rock and roll show started on this terrific Tuesday. Of course, this is none other than the Hotel California. A little bit of special meeting there today, sponsored by none other than Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 46 points, trading at 16,034. S&P is up 3 points, trading at 1883. We've got the NASDAQ Composite in the red, down $2. That's trading out at 44.86. The Russell 2000 struggling. That's off $8. Gold is off $2. Silver's up 20 cents. Light sweet crude down 51 pennies, trading at 28.91. Lead the charge here to the upside. You've got Priceline up $13. Bio-Tie therapies up 85%. Haven't looked at that. No idea what it is, but they've cured something up $11. Google's up 9. NetEase is up 7. AutoZone up about $7 as well. Adidas, that's up $4. To the downside, it's Chipotle. That's off $11. Equinix, that's down about 11. Regeneron Pharmaceuticals up 9. Those are down about a couple percent each. Equinix down about 3.5%. Tempur Sealy, that's off $4, about 6% out there. So let's go ahead. I guess that's the sleep number bed, right? It's a sleep number is off $4, down 6.7%. Okay, let's go figure out what these markets are doing. You know, we probably should pick up from where we left off on Friday. And on Friday, you and I together, how about this? You called a bottom out there when we just took a look at the charts. Now, we were looking at 30-minute charts, at 5-hour charts. We were looking at all different time frames. And those time frame charts, what they did for you and I is they identified a bottom, right? Remember that bottom? We saw price moving down into that 1 o'clock time frame inside the NQ, doing it with less relative weakness out there, forming a nice bullish reversal signal. And then we saw quite a move. In fact, we've seen quite a move off of in the NQ. We've gone from a price level down at about 1 o'clock, 12:30 to 1 o'clock on Friday, from about 4,075 all the way to a high out here of 42.15. Big, strong moves. Of course, we've had big, strong moves in both directions. Now we've seen a retracement. So what is the market doing and why? Well, it's relatively simple. Since we were last together, let's go take a look at the ES Mini. Let's start off with this page right here. Let me go ahead and turn off these market profiles, but let me make sure that I add my A to B equals CD tool. If I don't do that, how can I show you, how can we have a little bit of lighting out here? So we're going to go ahead and add that into the chart. Okay, so if we take, and the ES Mini was doing the same thing that the NQ was. We're just going to start here and take a look at the ES Mini. So coming off of this low out here, we can clearly see an A to B equals CD pattern. I believe you can see it. Let's go ahead and paint that in on the chart. So our A point's going to be that low, and the ES Mini was at 1230. Our B point out here is going to be this nice little up thruster. That took place yesterday at about 3 o'clock, 3:30. I thought the futures market had closed. In any event, if we take a look at the B point out here, there we go. And the C point is a little retracement down into about 9 o'clock yesterday. Oh, that was on Friday. Yesterday morning out here. And there you can see what the ES Mini did was completed a 1-to-1 A to B equals CD to the upside. The actual price projection of that A to B equals CD pattern was 1907.50. And the actual high that took place here at about 7 o'clock this morning was 1907. Missed it by one tick. One tick. That's a beautiful thing, isn't it? So you've got A to B equals CD. What it also really set up was a Gartley sell pattern. What do I mean by that? So we know they got the A to B equals CD pattern. Well, let's take a look at our retracement level. So our retracement level, come on, work with me. Okay, there you go. So our retracement level from high to low. Now, the high that we're using here is a swing point at about 3 in the afternoon on January 14. Down to the low on Friday. And if we take a look at the retracement, nearly a 0.786 retracement. Remember, we use these retracement levels. Oftentimes, we also use those A to B equals CD patterns. We use them all as guidelines. General areas. In this case here, the 0.786 retracement is 1910.75. Price, as you know, got up to 1907. Certainly within the area. Why do we use areas? Because the only way that you and I can understand and interpret what the market is doing is understand these patterns, number one, but then number two, understand the language of these charts. And the language of these charts, the cavalry, the bulls and the bears, they communicate to you and I. They send us more than just smoke signals out here. They send us real signals. And that real signal that came in right here at 7 o'clock this morning, between 7 and actually 7:30, was a nice old bearish engulfing candle, a little bit of follow through into the 8 o'clock time frame. And that said what? That said that the market, we know that we have a confirmed Gartley sell pattern on the 30-minute chart out here. So now as we take a look at that, we know that that's the pattern that's out there. You have been through this so many times. You know that what I'm going to say next is that every Gartley pattern has how many different outcomes? Exactly. It has 5 different potential outcomes. Let's take a look at 3 of those outcomes because that's where we're at right now. The first outcome is going to be what? That so-called dead cat bounce at 0.382 retracement. Well, that would take price down to the 1885 level. And as we take a look at the 9:30 open this morning, we saw price come down and hit that Johnny on the spot. Now, the bar that it was moving into that level, sort of a wide-ranging bar, which really suggests to you and I that what? That price ought to move down to the next level. Well, where's that next level, right? We have 5 potential outcomes. Outcome number 2 is the 0.618 retracement level. That is what's going on inside the market as we speak right now. That 0.618 retracement level is 1871.50. We've seen a low so far of 1873.25. It's possible that that's it. It's possible that we've seen the extent of the retracement or the move lower here this morning. If not, we should anticipate 1872. If the ES Mini continues moving down and gets to the 1871.50 level, doesn't stop there, price is going to go where? Outcome number 3. Now, at outcome number 3, which is your 0.786 retracement level, that's 1861.72. What price would be doing there at the same time is testing that swing point from Friday afternoon, the high of which is 1861.75. That would be the place where you'd want to be measuring volume, whether it's a 30-minute chart, a 10-minute chart, and so forth. So at this stage of the game, you've got that little Gartley sell pattern. The market has done what it's supposed to do. We'll see if it's good. There's no other pattern here on the way down other than just a retracement. So we've got to watch this 1871.50 like a hawk. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So a question came in and basically said, so what do I think the market is going to do next out here? Yeah, you know, we've got we have these competing patterns, right, on the 30-minute chart. Well, on the 5-hour chart, just as an example, let's just step that up a notch out here. We'll use a couple different time frames, but we know that price was moving lower, doing it with less relative weakness out here. It looked very good at about 4 o'clock this morning as price had moved above its TAS market profile high out here, which was at the 1888 level. It looked like that was really going to be a first level of support inside the ES Mini. What the ES Mini has done is come back, in essence, and tested that little point of control, the little blue dash line at the 1872 level out here. So we really have to go down into shorter term time frame charts to really try to identify the patterns out there. A 30-minute would be one of those. Now, what we can see out here is we have not seen many A to B equals CD up patterns out here inside of the market. That's usually an indication of a change in trend. You look for these lightning bolt patterns. So, you know, if we go back to December 29th, in essence, when the market had made its most recent high out here, this is the ES Mini, this is the 30-minute chart, you really don't see any A to B equals CD up patterns until you get to where? Until you get to basically the lows that came in on January 11th. You know, there's an A to B. There's two real A to B equals CD patterns out there. Those are, I'm not going to draw those in, but I'll just go ahead and color in the box area, so to speak. So there were your first A to B equals CD patterns. And then once those lows were taken out, the low here at about 1:30 in the afternoon back on January 11th, then, you know, that was an indication of either one, a consolidation. The market was going to go ahead and move to the downside. Well, the market went ahead and moved to the downside. Almost looks like a three drive to a bottom-ish type pattern out there. But let's not get into that. Let's not confuse matters here. So what do we know where we're at right now? Well, we've took a look at the first A to B equals CD pattern. The second one that could be setting up here is the one that's off of that B point, in essence, the low here at 9 o'clock in the morning. That was yesterday, all the way up to the higher. You can see the price is pulled back to the 0.786 retracement level. If there's going to be an A to B equals CD, it says that that low, that 1875, in essence, needs to hold. That needs to be the low for the rest of the day out here, and then you need to see the 1907.50 level get taken out. If that's the case, by the way, your price projection on that potential A to B equals CD pattern. That would take you up into, well, let me get rid of this retracement here. Give me a moment. We'll look at both sides of the trade, but your A point is down there. Your B point was up here this morning, as we mentioned, around 6:30, 7 o'clock, and your C point as you and I came onto the air. Now, because that retracement is, that just says, hey, gets you up to the 1904-ish level, 1925, but it is something that we want to pay attention to. Is this market, if it truly has found a bottom out here, like you and I called on Friday, then we're going to see A to B equals CD patterns replicate for a while. Once those things start changing, then that's curtains. Now, this could be that Gartley buy. Remember I said there's 5 outcomes? Well, we took a look at 3 of them, the 0.786 retracement being the third outcome. The fourth outcome is 100% move. That's where price gets all the way back down to the lows of Friday. And outcome number 5, we cannot rule this out, is the next A to B equals CD to where? To the downside. That says your A point could be up here at 3 o'clock in the afternoon on January 14th. Your B point could be Friday's lows. And your C point could, in fact, be the highs this morning here at about 7 o'clock. And that would take you to where? 1829 would be the number out here. So if, in fact, those lows of 1849 get taken out, that tells you prices are going to head down to about the 1829 level. If we try to figure out some other signals inside the markets, we can certainly take a look at our TAS market profiles. We can look at those just simply on a 30-minute time frame out here. Everything was looking pretty darn positive here. Tell you what I'll do for this, just to make it a little bit easier to see on the television on Tiger TV. Let me just go ahead and I'll make changes. We'll make the bottom of the 30-minute red. We'll make the center white, and we'll make the top green. Okay, there we go. Now, what I want to show you here is that coming off of that low here from Friday, notice how all of a sudden we started seeing the bottom of these boxes appear above the prior bottom. That was bullish. As soon as we saw this little signal right here, back at about 10 o'clock in the morning on the 18th on yesterday, that was a signal to say caution. However, those bottoms then started forming at a higher level out here, and now we're back in this cautionary period. So from a profile standpoint, if the markets are going to make an A to B equals CD to the upside, we're going to see price get above the current bottom of this box, which is at 1878. We'll call it 1879. And if it can do that, it's really set up in a bullish formation. What do I mean by that? It says that the point of control is closer to the bottom of the box. If it can do that, you'll see price get to 1884 and then take on the level of 1895 out there. So that covers both sides of the trade inside of the S&P futures contracts. Let's go ahead and move on to some other things that are going. Well, the last thing that I'll put out here is if the ES Mini simply finds resistance at this level and does move lower, then we can look at a 10-minute chart out here for one last piece of information, and that is we can see that price on the 10-minute time frame has been moving lower, doing it with what? Less relative weakness out there. We've seen a couple of bullish reversal signals. It's also in the 6th wave to the downside, so this could form a 7th wave if it does that with the price relative strength divergent pattern forms a bullish candle. That could be the extent of the move to the downside for the day out there. Okay, let's go ahead and move. So now we know what the markets have been doing, what they are doing, what they're up against. Now you and I, we can go try to figure out what else is going on in the market. And we haven't taken a look at any individual equities out here. So let's go take a look at some of those. Let's look at what's moving to the upside. Let's take a look at Priceline, see what it's doing. Up 17 bucks, 1.5% out here. And let's go ahead and turn on our profiles as well, just see what we've got out here. This is going to give us daily and weekly. So in the case of Priceline, let's see, where did this thing pull back to? Well, it's pulled back to breakout area. So the breakout area that it has pulled back to looks like this. See where we've got these gaps out here? We've got this volume. So in the case of Priceline, basically it's pulled back to the first gap that took place here on February the 12th. Hey, the volume there was about 1.1 million shares. As price moved back here on Thursday, 1.1 million shares. So about the similar type of volume back into a breakout area. But for the price line to move higher, it needs to get above 1136.80. If it can do that, price ought to head up to the 1203 area. And if it doesn't do that and it starts to move lower, you could anticipate that price line will move down to about the 990 level. I believe after the bell out here, we've got what? We've got Netflix, NFLX. Let's go take a look at its stock chart, see if we can figure out what it might be doing out here. So it's trading out at 108 and change. And it's trading, it's running right into resistance here of its TAS market profile high from a weekly standpoint. So what does that say to us? That says the downside support, one of the downside levels of support, if Netflix disappoints after it releases its numbers from a market standpoint, that would say we'd be looking at about the 92.25 level out here. So look for, and what we have down there, what Netflix has down there on a daily basis, got this high volume high that has not been tested. And that is the August 24th level of 59 million shares, the bottom of which is 85.50. So to the downside, 85.50 to 92.27 really ought to hold as support. To the upside, there's no high volume highs out here, nothing really to be tested. So to the upside, it looks like resistance is probably its most recent swing point, somewhere between 122.75 and 131.19. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back folks. Dow's up 39. S&P is up 2 points. Had a question if I could take a look at silver and a couple of silver equities. If we take a look at that, let's just go back to the mining sector itself. We've got silver up 21 pennies out there. So from a percentage standpoint, that would put silver up, I don't need to do the math in my head. Silver is up percentage-wise. Where are you? You should be right here. About 1.5%. Okay. And if we take a look at the mining sector, as a whole, it's trading in essence to the downside. One of the specific stocks, we'll take a look at the stock first, then we'll go take a look at, that's why we can take a look at volume. We've got First Majestic Silver, AG. So let's go try to figure out what we can learn here. Market, the stock itself is below daily and weekly profiles out there, so there's no sign of support from those from this stock in that time frame. Let's also take a look at what it's done. It's traded out below its swing point from September 11th. Now, September 11th is where the mining sector itself made its most recent swing point. So if you trade below September 11th, that's not a good thing out there. And we know that swing point inside of First Majestic AG, 2.2 million shares. Now, price, that's $2.66, by the way, is where price traded to on that date. Now, 266 was not hit. It was 267 on the 14th on Thursday, and then 267 again on Friday. 1.2 million shares, 1.7 million shares. Again, that's going against 2.2. So you had the right volume metrics, but you didn't test the swing point. Today, you've got a test of the swing point, and you're trading below it. So if First Majestic AG closes below that swing point, you will likely, it's got 1.8 million shares. Shoot, you've got pretty decent volume. Let's, in fact, try to do it. Let me see here if I can do this. I can do anything. It's just a matter, I don't want to waste a lot of your time, but 1.9 million shares is what we'll say. We've been trading for 4 hours. So it looks like this is going to do about oh, that's weird. Oh, okay. Got to type in the right number. 3. Ooh. So First Majestic, if we were to keep up this pace out here, is going to do about 3 million shares. So this is taking out a swing point with volume. This says that there is some problem with this equity, regardless of what the correlation is or isn't with inside of silver and these mining equities. This equity itself has got some other issue because it is taking out a swing point with volume. Now, let's go back a little bit further inside First Majestic. Let's go ahead and put this on a monthly time frame out here. And no, that's not going to help us. So this is trading in essence at all-time lows out here. That's what it is doing today. So be careful in the case of First Majestic. We do take a look at its correlation to the price of silver out here. That's really what the bottom chart is showing us. The top chart is the silver contract, the continuous contract. The bottom chart is the equity here for First Majestic. And, we can see certainly the correlation, but that doesn't mean that that's going to necessarily be the overriding factor. And in this case here, I would be concerned that it's taken out a swing point with volume. The other equity, was what? I'm just looking for it here. Where is it? SSRI is the ticker symbol. So let's go back and take a look at it. See if this thing is also breaking to lows. SSRI. That is for silver something or other. Silver Standard Resources. Ooh, this does not look good. Oh, this is the daily chart. Okay, so this is also taking off. So this is taking out. Now, its swing point low is all the way back in 2014. That was from the trading day of November 5th. And then a volume of 3.1 million shares. You've done 1.853 so far today. I think that's a pretty close 1.85. That gives you about 3 million shares. So it's taking out that swing point. That's got 3 million shares. The low of that is 392. So let's put this on a monthly chart. This is another equity that says, hey, this is at least better. At least you have some potential support out here. This equity actually broke out the month of May 2002. Unfortunately, that low is 285. So if you break that swing point that we were just looking at, pretty good chance that this is going to come all the way back to the breakout area, which is around $2.85, give or take. Pass, PAAS. Let's go see what that is, Pan American Silver. Let's go see what that is doing out here. There's your monthly chart. The monthly chart shows that this is also trading back into its breakout level, which was May of 2002. Looks like 550 is the number there, but let's put the daily chart. This one also indicated that it's trading below its most recent swing points, October 26th. That low was 585. You're at 572. The volume there was 3.4 million shares. You've done 2.1. 2.1 on a straight line basis says you ought to do about 3.4. So this looks a little bit better than the other two that we looked at, but it doesn't exactly look like doesn't look that good out there overall. So that's what the silver stocks are doing out here, and I would just say just be careful. Just be careful inside of those silver stocks. Let's look at and what gold. I mean, let's see what the GDX is doing. So what is the overall group of mining stocks here doing? They are testing and trading below the swing point there from September 11th. So that number is 1262. Volume on that 9/11 day, 63 million shares. You've done 29. So as a sector is concerned, as the sector is concerned, you are you're testing that swing point with light volume. Now, in the GDX, you got weighting inside there. If you take a look at that low, 1262, if you can hold 1262, you're going to close above it. You'd have a rejection on price and volume in that swing point. This sector here has me very confused, very confused. Now, we've played it, my clients and I, we've played this here several times, some of the individual equities, sometimes the ETF structure, over the past year, and have been very successful with it. And so I really do believe, who knows where where that belief comes from, but I really do believe I've got a good handle on this sector. We put together all these different tools. I don't necessarily share all of those tools with you when we're on the show out here, but I will tell you that that this sector has me a little bit befuddled. I don't even know what befuddled means, but I've heard people use it, so I think befuddled would be correct out here. And but I can tell you, I looked at something over the weekend, over the long holiday weekend. I shared it with subscribers yesterday, sent out just so we could have a general overview as far as where we're at in the markets, both long-term, short-term, what the markets are doing out here, and specifically took a look at the mining sector. And I was surprised to see what I saw inside the mining sector under the covers, so to speak. And it says that this mining sector really ought to take off. But as I said, befuddled. I got to look up and see what that word actually means out there. Maybe somebody in the den will tell me what that means. I probably ought not use a word, befuddled. It sounds like like a caramel corn or something like that. What is befuddled? It says make someone unable to think clearly. Well, you can sign me up for that inside of the mining sector, because it really should be able to take off. Steve Rhodes with TFNN. Befuddled, not with you, but with the mining sector. Dow's up 39, S&P's up 3. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 34, S&P's up a couple points right now. So let's take a look at currency-wise. Let's go see what we've got going on currency-wise. Euro, Japanese yen. We know that this thing has made a 100% move by getting back to its swing point from April 14th. Price here has just been consolidating, on the at that low. We've got a nice little reversal signal right here on January 7th, but we haven't seen really much in the way of action out here. If the market is going to move higher, we're going to see this currency pair move higher as well. If it breaks lower, that will be a very nasty headwind for the market. Ought to take the market lower out here. Let's take a look at the IWM. That is struggling. That's off about $10 right now. Let's look at the IWM, which is down to $1.19. The Russell 2000 is down 10. IWM is off $1.20. 29 million shares today. So what is this doing? It's traded higher intraday, but we know that it opened up higher just simply because of the futures market. On Friday, it did volume of 85 million. Today, you're doing 29 million shares out here. You got light volume. There's no real market profiles for us to really consider. If you take a look at these green lines, you got an intersection there of happy or unhappy and unhealthy because price broke below that level of support. That level of support, if we put this on a monthly chart out here, that would be taking a look at the long-term trend line, right? So you get the long-term trend line coming off the March 2009 level. So that's your diagonal line. And then we've got the swing point out here from October of 2014. And what this says to us, unless the Russell 2000 can get its act together, the Russell 2000 is headed down to 85, or the IWM, I should say, would be headed down to about $85.71. So the level that the IWM here, let's put it back to a daily chart. The level that, in order for this market to get any legs, if it can get any legs to the upside, the first level of resistance is going to be that trend line. Broke that trend line. That's where I would anticipate that the bounce at least would take you to, which is in the 103-ish type area. If you can get above that, then you're talking about some other type of retracement. Retracement that could take you to the 106.06, 111.39 area. If it can't do that, let's take a look at a weekly chart. Let's see where the next retracement and or A to B equals CD patterns are set up inside this. Let's turn on the A to B equals CD tool, though. Without that, you can't draw it. Okay, there we go. So we know we got 85.71 as one possibility. The A to B equals CD patterns inside of the IWM. Your A point is out here from the week of June 22nd. Your C point is this nice little hammer candle on September 28th, the week of September 28th. Your C point out here November 30th. You can see it's made the 1-to-1. If it takes this area out, the next level is 91.95 out here. And at 91.95, just out of curiosity, we've got a number of different swing points that we can use. I'm going to use this swing point right here, that little major swing point that happens to be the swing point that we're using from October of 2011 to help us draw that trend line. So from that low all the way to the highs out here. Boy, I tell you, the more you look at this, the more that the IWM is headed back into the highs here from 2007, all the way back to that consolidation level that it had broken out of. How about that? The highs of 2008. Interesting. So this thing has got to get some giddy up and go. Otherwise, 95 to $86 would be where the IWM would be headed to. Let's take a look at, so the NASDAQ was in the red out here, but let me take a look at its advanced decline line. Let's go look at it. So as we take a look, this thing is not making a lower low, but we haven't seen a lower low in price. There still is a divergence out here that says that this market just simply wants to bounce. But wanting to bounce and being able to bounce are two different things out here, right? We've seen some nice patterns inside of the market. We certainly saw the one that gave us a couple 100-point move off of Friday's low, more than a couple 100-point move, right? To go from Friday's low to this morning's high in the futures market, and you're probably about 500 points or so. Inside of the Dow, that is. Any message here? No, I don't see that. I don't see anything negative here inside the S&P. We take a look at the VIX index. What's the VIX index doing? VIX index is moving lower, but the market is not out of the woods until the VIX index, which is straight at 26.39, can get below 22.31. So there is a long way down inside of the VIX index in order for this market to truly get some legs. If it can get below 22.31, the next level of potential support for the VIX would be $18.77. That number is going to move over time out here. If I look at all the futures contracts, all the futures contracts inside the VIX, this takes us through September of 2016 at this stage of the game. It's all in that backwardation mode. I mean, you go out to September 2016, that futures contract is trading at $23.20, and the cash VIX is trading at $26.39. That is not your bearish setup. It is not your bearish setup out here. Okay, what else can we look at? Let's go look at a couple of individual stocks here for the next couple of minutes. Let's go look at what's moving to the downside. Regenerative Pharmaceuticals off 12 bucks, 2.7% out here. This is what the heck did I do there? This is the daily chart. What did I do there? That's weird. Okay, I somehow just turned everything off. But let's take a look at Regenerative. What is it doing? Looks like it's going after that low. That low being September 28th, 3.1 million shares on really light volume. Majorly light volume, 581,000 shares. The volume inside the individual stocks, you can rely upon that for your tests and so forth. As you know, I don't really care much for the ETF structures in the indices because I know David White has done some studies on this. For me, it just simply, I just believe that there's too much high frequency trading, hedge funds and the sort. Go take a look at for example, go add up the volume of all the individual stocks in the Dow. That's pretty easy to do on a daily basis. Take a look at the volume in the Dow Diamonds. There's just no way to connect those dots out there. And you got plenty of other ETFs that are trading, in essence, the Dow out here. But look, let's stay with Regenerative Pharmaceuticals. Let's see if we've got any profiles that also provide us with any guidance out here. And the answer is no. Resistance, that's the weekly profile, high. So resistance in Regenerative, which it hit this morning, is 472.22. So looks more like this is going to head to 435.51, but it is moving down there with light volume. Chipotle, Let's go see what Chipotle's doing. Had a couple of nice days last week, and the highs, it was moving higher with 3 million shares. Today, you're pulling back with about 1.5. So a little bit lighter volume. Here's where the resistance level is inside of Chipotle. You can see this got many gaps. Those gaps act as either support or resistance. In this case here, acting as resistance. So there's the level, 477.97, that Chipotle needs to get above. If Chipotle can do that, it could actually manage to move all the way up to the next resistance zone, the next gap. It's going to have a lot to slog through. Slog being a technical term for really struggle out there. But if it can get above 477.97, it could slog its way into about 640, which was the gap down from the trading day of November the 2nd. Dow's up 40, S&P's up 3. If you want me to go look at something, just type it inside the Tiger's Den. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Another leg here to the downside. The Dow is flat, basically. It's up 14 points. The S&P is totally flat. NASDAQ composite off 16. Russell down 12. Have a request to take a look at the IBB, the biotech, NASDAQ biotech sector out here, see if we can figure out what it is doing, and some more befuddlement. What the IBB is doing is dealing with the August 24th swing point, which has got volume of 4.8 million shares. And prices down below that level. 284.16, by the way, and it's below that level with light volume. The volume most recently, we're looking at 3.4 on January 13th. Then you close back above that level on last Thursday with 4 million shares. Then you closed on that level with 3.5. Today, you've done 2.3 million shares out here. So again, volume is light as it takes out that swing point area. So where is it going to trade to? Well, the next swing point inside the IBB, if it can't get back above 284.16, says it can trade all the way down to 247.86 out there. And that's a swing point that also has some pretty decent volume. Well, I say pretty decent, 2.7 million shares. But that's the next swing point. Once you get below a swing point, you move to the next one. So the IBB, from a bullish standpoint, has got to get above 284.16. If it does not do that, you're looking at 247.86 as the likely targets. There are no market profiles inside the IBB that are going to assist, only resistance levels, that being the daily or the weekly right now, which is 293.63. 277, by the way, is the bottom of the daily box out there, 277.74. But that's not what it is contending with as we speak right now. If we look at a long-term chart here for the IBB, we take off the market profiles. Let's go see what they communicate to you and I. Let's take a look at a trend line. That trend line here, coming off of the October 2011 area, is probably a decent one. Here's one trend, so it's nowhere near that trend line. That would be another trend which it has broken. But you could easily, if you take a look at this trend line right here coming off the lows from October 2011, then let's use as a touch point November of 2012 out here. You kind of have an intersection of happy and unhealthy right at about the 247 level. But that's a ways off. We do know that the IBB did complete a 1-to-1 A to B equals CD to the upside on a monthly basis. From a weekly standpoint, if we look at volumes here, August 24th had volume of, this is probably important for us to look at, August 24th, 15 million shares, and last week, well, that's interesting. So last week, the IBB was actually, remember we looked at the daily chart? The daily chart did not take out that swing point with volume, August 24th. The weekly has. Now, the close last week, 284.18, 2 pennies above it, but it was pushing into that swing point with volume. So the weekly says you would at least test that level. Again, that's what we're doing this week out here. No idea what the volume will be this week. But if you get close below 284.16, you're probably headed back to about the 247 level. That is the IBB. Had a question to take a look at light sweet crude out here. If we go take a look at oil, you've got light sweet crude trading down 85 cents at 28.57. It continues. That's a weekly chart. It continues to trade right on a downtrend line, slightly below it. It's got a mind of its own. That's the red diagonal line going across my screen out here. There is a potential bullish setup, but it needs to get back above that trend line and then try to take out the top of the descending trend line that's coming off the highs out here from November the 4th. But a very manipulative market, light sweet crude, and I'm just not seeing any big reasons to be playing in that sandbox. But you know what? Maybe David White has a different idea out here, and he's going to be up in just a few minutes, and so maybe he'll shed some light on that. If not David, well, then it could be Tom O'Brien from 3 to 5, and if not Tom, then it will be Andy White, because this is Tuesday, typically Turnaround Tuesday, and I look forward to seeing you on Wonderful Wednesday. Have a great day, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.